you a lot of team cushion that's been built up. But if you look at the underneath the market experience, since the October lows, and since we had that stagflationary scare a year ago, it's more take a look at the volatility index on an annualized volatility basis. I don't think it's just doing what the market's doing. Yep, it looks low on the chart. Another way of saying maybe the overall equity market processing all this information. So yeah, we got down under 14, actually down under 13 parts. It's kind of a neutral situation. If you look at the actual experience, realized volatility, super bearish to neutral at this point. Stocks versus bonds also a dynamic that could come into play. Maybe arguably just doing what the market's doing. Partly the rebalancing effect on the charts. Another way of saying maybe the overall equity market you have had this huge quarter to date, and the outperformance price might be higher. I view it more as kind of a neutral situation. Huge swing factor necessarily, but something migrated to keep in mind also for any individual neutral and realize stocks versus bonds also a dynamic that could come into play. Maybe arguably last week's pullback was partly the rebalancing effect out of equities.
I have a question you're not going to like. I don't know if you're going to like it. Valuations. The bears also argue that the market is just too expensive relative to where it should be, relative to where interest rates have gone. I know it's reflective of a small number of mega cap tech stocks, which make up a lot of the index, but where are we now?
No, I love this question,
oh, you do?
Sarah,
okay.
Not just because it comes from
you. I have a question you're not going to like. I don't know if you're going to like it.
How expensive
Valuations. The bears also argue that the market is just too expensive relative to where it should be, relative to where interest rates have gone. I know it's reflective of a small number of mega cap tech stocks, which make up a lot of the index, but where are we now?
No, I love this question, Sarah. Not just because it comes from
you were always saying that you can't ask how expensive the market is. The market,
tech and internet,
you look at equal
everything else. Well, I think there's nuance to it either way. So if your main complaint about the market is, it's only saying that's super expensive, but I'm saying that have been doing everything. It's not that you also want to separate this market. I also will grant. I think if you didn't get a massive valuation reset, broadly defined, where things got cheap and you rebuilt third of the market expected tech and internet to a really everything else looks like it's kind of around neutral coming out of a bear market. We're going to have some work that says it's like great multi-year run rate of returns. I'm not saying that's cheap, but I'm saying that I look at my little it's not the main hurdle for this market. I also whether it's like you didn't get a massive valuation reset and Best Buy, the ones I always bring up that are down 30% over 2 years to a really. You're not going to tell me this evaluation problem. Maybe you're going to tell me coming out of a bear market recession eventually. But to me, it's multi-year run rate of returns.
Hey, Mike, I hope you're on Apple $3 trillion
proxy of cyclical bellwethers like
GM,
because it's clear we were going to go down this morning. It seemed like we were down 40-30% over 2 years. You're not going to tell me this evaluation problem. Maybe comes into the Apples and the other favorite. It's a different tech stocks.
Mike, I hope
what
you're
does $3 trillion
Apple
mean?
$3
I don't know. It's an abstraction at some level. It's a company that's going to have $400 billion in sales. This is the other thing because it's clear we were going to go down. You tell me what that's worth. It seemed like we were going to have a boring open, and then I don't know. It seems like quicker early morning money comes into companies with massive and the other favorite and price to sales ratio.
$3 trillion market.
I don't know. It's an abstraction.
I love this crazy.
It's a company that's going to have $400 billion in sales and
trillion in billings and sales on a global basis would make it bigger than
that's
many
crazy.
countries.
But I don't know. It seems like that there are.
Let's continue the conversation on where the market goes from here. Joining us at Post 9 is Adam Parker, Trivariate Research CEO and CNBC contributor. It's great to see you, man. Welcome.
Yeah, thanks for having me.
Interesting. I love nice work this morning looking at gross margins and sort of this $1.1 trillion in billings between CPI and PPI and what sectors that benefits many countries.
Yeah, last time I was on.
Let's continue the conversation on where the market goes from here. Joining us at Post 9 is Adam Parker, Trivariate Research CEO and CNBC contributor. It's great to see you, man. Welcome.
Yeah, I had no idea it was going to be
nice work this morning looking at gross margins and sort of this fissure between CPI and PPI and what sectors that benefits.
Away from what you guys want to talk about, but I actually do want to talk about that.
I would assume. Yes, you wrote it.
Yeah, and so thanks for the EFIS pitch. Sarah wanted to talk about the Fed, and I hijacked your meeting to talk about AI. What makes stocks 3 months ago? I had no idea it was going to be 6 months from now. 80% of my conversations. In the end of the day, that's probably the number one thing I want to know is like, do I have a differentiated view how to hijack this conversation away from what you guys want to talk about? But I actually do want to talk about that going on.
Yes, you wrote it.
Inflation and what you're paying for stuff. Thanks for the EFIS pitch stuff, and I think it's going to cause a lot of stock volatility. What makes stocks go up is margins for surprisingly high gross margins 6 months from now. And probably in the end of the day, that's probably the number one thing I want to know is like, do I have abatement of headwinds and maybe even tailwinds on the cost side? So margins. That's a sector that and there's some wacky stuff going on with, inflation and what you're paying for stuff. So that was kind of what we wrote about stuff. And I think in the flip side, going to cause a lot of stock volatility. I just noticed that margins for staples are at all-time lows, and probably have some, probably potential abatement of headwinds and maybe even tailwinds on the cost side. So that's a sector that looks optically expensive in some cases that I kind of like more than I used to.
Do you think positioning is going to be a huge story in the back half as people try to get at least some credit for a rally that they might have missed?
Than people think. And yeah, it's a good question. I never know how to totally answer that because the multi-strats are so big now. So we're sort of saying we like staples more than industrials. Such huge gross exposure that you're used to thinking, $100 billion account like that.
Do you think positioning is going to be a huge story in the back half as people try to get at least some credit for a rally that they might have missed?
Gross and it takes to close the question. I never know how to totally answer that because the multi-strats are so big now, and they run at just such huge gross exposure that you're used to thinking, whether the big multi-strat see an opportunity to spread out winners from losers in the second half of the year. That probably matters more than sidelines. It matters. When there's a multi-strat running $80 billion at 900 gross on that I have access to 1,200. You could get, and they trade 500% a year instead of 30%. The impact go up. So it's possible you get 10, 15, 20-fold. So it really just depends on whether the big multi-strat see an opportunity to spread out winners from losers in the second half of the year. That probably matters more than years. So the cash on the sidelines people can take it up more. I don't know a lot of people who have access to participated in this rally. People with not a lot of exposures. You could see grosses go up and nets go up. So it's possible you get 15 or 20 this bigger position fuel rally.
Are they underexposed as they start to capitulate?
I think when you look at the hedge fund data, it shows if I'm being cynical, I worry that people pile in at the exact time. Certainly people can take it up more. I don't know a lot of people who think so. I think you get more participated in this rally. Exposure up. There's not a lot of bottom up traditional sell-off. But I don't agree. You guys were chatting earlier. I don't agree earnings can collapse at the way some of the bigger firms are articulating. I think that's very unlikely. If I'm being cynical, I worry that people pile in at the exact time you guys. So about a year ago, which you'll remember, I said, I don't know if 2024 earnings are above 2023 up before. And you remember we talked about that a couple times. And I'm not sure. I've changed my view. I think the idea that collapse this year in V-shapes at the way some of the bigger firms are articulating is just not the consensus view. I think that's very unlikely. And I don't think investors think earnings are going to be well below $200 because if you already take what you had a year ago in the first quarter, remember I said, I don't know if 2024 earnings are above collapses ever to get down there. And remember we talked about that a couple times. That seems unlikely to me. I'm not sure I've changed my view. I think the idea that collapse this year and V-shaped recovery next year is just not the consensus view.
There's a conventional wisdom that
Apple looks like it's leading the market
well below $200 because if you already take what you had in the first quarter,
because of the pricing power and the inflation,
you're embedding one of the bigger collapses ever to get down there, and there's too many reasons why that seems unlikely to me. Right, and weakening dollar generally materials, low in consumer holding depreciation, auto soft.
That's generally the things that drive your cost of goods sold. There's a conventional wisdom that
which one of those things look like they're incrementally getting worse? Not really any of them. So some of the companies are showing okay pricing power still, or they have work combination of their input costs. Price. So I think it's unlikely earnings collapse this year, and I don't think they'll be generally materials, labor, unless you think there's a big that's generally fiscal stimulus, and you want to kind of position your portfolio for that. Which one of those things look like they're incrementally getting worse? So I'm hearing not really any of them. I do so a lot of meetings too. Some of the companies all do, and that's okay pricing power still, or they have work in process. They're going to ship out a degree for a living. So I think it's unlikely paid for earnings collapse this year. I'm not hearing anybody think the V-shaped recovery next year that much, unless you think there's a big this year fiscal stimulus, and you want to the probability of your portfolio is lower than it was 6 months ago, and the severity of bear cases. I'm hearing form is lower than it was 6 months ago. A lot of meetings too. I guess we all do. That's part of the reason the market's up. I have a company
well said.
For a living. I try to
do piece.
I like the Go America thing. I'm not hearing anybody think their base cases are collapsing that much. I really like it. Part of the reason the market's up this year. I don't know if you heard. Is actually because the probability of the bear case is lower than it was 6 months ago. And the severity of a bear case is, I would like to talk is lower than it was 6 months ago. I think that, statistical expectation, that's part of the reason the market's up.
Wada.
Well said.
And Andrew Bailey.
I like the Go America thing we have going on here.
I
was just giving her a chance to talk about it.
Represent us overseas. I don't know if you heard.
I'm in district today. This snow trade.
Wait, you kidding, right?
Here,
I would like to sit down with Lagarde.
they have this event today, summit or whatever. Nvidia is gonna be the Nvidia CEO is gonna be speaking there. So I'm expecting a somewhat decent move in this stock today. So and they announced a partnership with Microsoft this morning. So Let's see what this does.
One source of funding that is gaining allure in the public and private markets.
And is the tech trade starting to run out of steam? We'll discuss that. Big show still ahead. Stay with us.
Start cutting rates as well. So that backdrop seems more promising to us. So as we head towards the back half of the year, in any given year, 1 to 2 corrections are the norm. If we get any of those, we think start positioning for a broader market rally ahead, not just a narrowly led market, but also bonds we think start becoming much more interesting in that backdrop as well.
So I wonder, Guy, if the rotation that we saw last week a bit, or actually the week before, where you had cyclicals, you had industrials, you had small caps kind of doing better. Yes, last week didn't really count if we just look through it for a second. Is that become then trade more to the second half?
Maybe, but to Mona's point, maybe you get a big sell down in the middle of all of that, and that's the moment you want to be getting in. There's still tons of money, Alex. Tons of money in money market accounts, and nobody can quite figure out yet where they want to deploy that money because they're getting paid to wait. How much longer do you want to wait?
Well, Mona, to that point, the money in money market funds, what market does that belong to?
Yeah, it's a great point. Look, we think that money in money market funds needs to start getting deployed over the next 6 to 12 months. And I think it goes to both markets. I think it can go certainly to longer duration bonds. You know, the short duration trade has worked really well thus far. But when you think about it, we're probably heading towards some sort of peak in Fed funds, which means a peak in Treasury yields as well. And that's a great time to extend duration. You not only lock in some of the better yields, but then over time you get price appreciation. If yields, over time, the Fed pivots lower as well. And then we talked about the equity trade. So we think, it's not a wholesale trade out of your money market funds, but start thinking about complementing, cost averaging in across the board. You don't want to be stuck trying to reinvest in an environment of lower rates as well.
How do you sequence that, Mona? How far away are we from the best rate you're going to be getting on the 10-year? How far away are we from the best rate you're going to be getting on the 2-year? Is that still to come, or do you think that is priced now?
Yeah, historically, and we've run some numbers on this, it's about 6 weeks ahead of when the Fed funds rate peaks is when Treasury yields tend to peak as well. So, we could be really talking about the weeks ahead where we start to get the peak in Treasury yields. Now, markets are, of course, notoriously difficult to time at the top or the bottom, but we certainly thinking about this trade in the weeks ahead makes a lot of sense. We think the Fed will go one more in July, probably leaning towards a pause after that, but of course, very data dependent. And so we're really talking about a yield environment that's looking to top out in the weeks and really months ahead. And so I think that is the opportunity. When we think about the duration trade, for many times we're neutral, but really when you want to get involved is when you see these inflection points. And we have one inflection point in the Fed moving to the sidelines, but the bigger inflection point is when the Fed pivots lower.
Mona, great to catch up. Thank you very much indeed.
Thank you so much, guys.
Mona Mahajan, Senior Investment Strategist, joining us from Edward Jones. Still ahead, we need to be talking about cars, very fast cars. Aston Martin in the driver's seat with Lucid for a brand new EV partnership. Not sure who's in the driving seat. They're both looking pretty comfortable, unlike Alex, who has a new chair today. Do you see her wriggling around a little bit today? That's the reason why. Details on that story. The startup is coming next. This is Bloomberg.
It kind of makes me think about last year's manufacturing weakness and kind of, watch those PMI charts of manufacturing go down. We watch services kind of follow, but much more slowly. Right now, it seems there's spending happening on, we saw for cruise lines, decent amount of booking. We see hotels, a decent amount there. But it sounds like what you're describing is that maybe the stuff that got hit last year kind of manufacturing weakness and kind of, watch those PMI charts of manufacturing go down. Watch services kind of follow, but much more slowly. Right now, it seems there's spending happening on, we saw for cruise lines, decent amount of booking.
If we can break Friday's high at 43.66 level, would be in pretty good shape here.
For most of the year began to break out 2 weeks ago. So it looks like the industrials would even take, some of the non-technical discretionary year, but it looks like it's beginning to signs that maybe we can get rotation back into those names and broaden the market out.
This is a rotation or bust, basically, at this point?
You don't want to relive 99, right? Yeah. And so to not relive 99, you want this market to broaden out very quickly.
99 or the COVID boom, basically, right?
But even take,
do you want to see, is it a good sign if we start seeing SPACs, start hitting again, or should that
we're getting some IPOs back. That's good news. That's very you don't want to relive 99, right?
Okay. And so what about the expectations for this? You guys just did a survey of your clients or the COVID boom, basically, right? Where does it lie right now? Do you want to see, is it a good sign if we start seeing
so we surveyed our customers,
start hitting again, or should that
we're getting some IPOs back. That's good news. That's very healthy. Maybe not funds, long onlys, and so forth.
What about the expectations for this? You guys just did a survey of your clients and for sentiment. Where does it lie right now? Tell us about how you conduct the survey and what you found.
Yeah, so we surveyed our customers. We like 520 odd responses. Also went to social. So that's a little bit. A very broad base of investors, both institutional and retail. Energy hedge funds, long onlys, and so forth. People are looking for reasons. That was pretty bullish.
So they're bullish second after tech is energy?
For the year.
Wow.
The crowded trade, if you will, was in
want
tech.
to be,
we asked
or they're owning it right now.
The question was, what do you think is going to do best in the second half of the year? Energy was number one, 40%. Number two, tech was 40%. Number one, energy was 12% number trade. People are looking for healthcare and financials now. 10, 11% each.
So then I guess second after tech is energy. Is it possible to kind of go back to the barbell strategy a lot of people were talking about? They're owning it right now.
Yeah, the question was, what do you think is going to do best in the second half of the year? Energy was number one, 40%.
Basically,
tech was 40%.
Very much into crude and like specific inflation-related sectors. I mean, is there a market in which both those top two favorites will work? Is there a market in which to kind of go back to more the barbell strategy? A lot of people were talking about
because if energy rallies, you get inflation
a year ago or so. Exactly.
And that's going to take yields higher, and that's going to
2022 basically, unless you were like very much in crude and like specific inflation-related sectors. I mean, is there a market in which, from your view, those top two favorites will work? Is there a market in which tech should we take the Fed at face value and energy rallies?
Hard to see because if energy rallies, you get
more hikes this year. Exactly. How much certainty do we bake that into our models?
Yeah, but it feels pretty certain. At least one more in July, for sure. Even the market agrees to that.
Yes.
But inflation's been so sticky and labor markets have been so strong.
Should we be?
I think that second rate hike is 80%.
Should we take the Fed at face value right now?
And then after that, hopefully, we stop out.
It's going to be more hikes this year. We were talking earlier. The correlation between 10 years and S&P, do we bake that into our models? It's linked in a way that we haven't seen in a long time.
It feels pretty certain. At least one more in July, for sure. Even the market agrees to that.
To your point about the rotation potential seems very encouraging. But does that work
I think that second rate hike is 80%
plus if we get there in the 10-year?
And then after that, hopefully,
we stop. Where is that line in the sand?
I'm kind of worried about the 2-year over 5.
The correlation between 10 years and S&P.
Because that tells you not only are we higher for longer, but
it's linked in a way that we haven't seen in a long time. It's actually positively correlated now. So that's your point about the rotation potential seems very encouraging. But does that work?
And I'm worried what happens with a 2-year
4% plus if we get there in the 10-year?
More than the 10-year.
Where
the 2-year could say,
I'm
kind of worried about the serious.
The problem is
because that tells you not only are we higher
Lucid's
for longer,
promise of having world-beating technology only really comes with scale, and they've not been able to achieve scale. They've had a lot of problems. I know that the root of your question is whether you believe the components for electric vehicles themselves become commoditized, right? And that's kind of the value proposition Lucid puts forward, very high energy density, and if they can manufacture them at scale, it's kind of a plug and play, pardon the pun, for people that want to make battery electric cars that don't currently.
Yeah, and how fast and what kind of performance do you get out of them? Is there a kind of bog standard one? Is there a high performance one? I'm just kind of wondering how the evolution of this is going to work, because electric motors spin up really quickly and, as I say, have really high torque. How do you make them go faster, I guess, is the key question.
Yeah, and having a 100 kilowatt-hour battery pack certainly helps with that. I think for a really long time, probably, the emphasis was on range, right? Because for the average consumer, there was an anxiety point. But if you want performance, think about Porsche's Taycan, for example. You can extract performance in other ways. But again, remember the context. Lucid's really struggled to make its own cars. So selling its tech, let's see how it goes.
We'll watch this space very carefully. Ed, looking forward to the show a little bit later on. Ed and Caroline Hyde joining you with Bloomberg Technology in around 90 minutes' time. This is Bloomberg.
Or those who think he made a mistake by going in the first instance. So he's got dissent within his power structure as such, and so he doesn't know who's friend or foe. The fact that Prigozhin was on the road, I think someone told him, by the way, whatever coup we're planning, it's not working out. Either Putin has taken out your supporters, or they're backing out made a mistake on their going in the first instance. Right now, he's got dissent within his pretty his power structure pretty concerned about who's in his camp, who's friend or foe. Obviously, investors are going to take that into account. Was too early to tell. I think don't make any decisions. By the way, whatever coup we're planning, it's not working out. Either Putin
Finally, we mentioned these comments from Lavrov a few moments ago. One of them, though, is the idea that Russian special services will investigate whether Western powers were behind the events of June 24th. Do you expect them to advance that narrative significantly?
It's too early to tell. I do. Don't make any decisions yet. To do whatever he can to draw attention away from his own.
Finally, we mentioned these comments from Lavrov a few moments ago. One of them, though, is the idea that Russian special services will investigate whether Western powers were behind the events of June 24th. Do you expect them to advance that narrative significantly?
The conversation. I think Putin has to do whatever he can to draw attention away from his own. Point to NATO, point to the United States, domestic problems, and anybody but within his own. Point to NATO as being the cause of any problems.
We also wonder, Mr. Secretary, how China's watching this, how the leadership there, as we try to figure out what they're going to do with Taiwan, the relationship with Russia, the concerns potentially about secondary sanctions from the U.S. and just the effort here to go forward with the military invasion. We also wonder, Mr. Secretary, how China's watching this, how the leadership there, as we try to figure out what they're going to do with Taiwan, the relationship with Russia, the concerns potentially about secondary sanctions from the U.S. and
against Taiwan. I think that would be
the effort here to go forward with the military invasion.
I think things will settle down as the Chinese go forward, having met, and then we'll make our strategic calculations in a different context. Right now, we have to say what's going to happen. I think we're opening the dialogue. I think, and then we'll know. I don't think the Chinese want to take any move at this point against Taiwan and the African countries, I think Syria and others who support. So I think things will settle down as they I kind of doubt it, and then we'll make our strategic calculations in a different context. Right now, we have to say what's going to happen.
Secretary Cohen, thank you for joining us today. Really good to get your thoughts.
And then we'll know whether or not China and other countries like North Korea and the African countries, Syria and others who support.
But is that trade
will back away
running out of steam?
I kind of doubt it, but nonetheless, I think Putin has his hands full trying to solidify his regime.
Secretary Cohen, thank you for joining us today. Really good to get your thoughts. Former Defense
Stan Lee, that was part of the.
Well, big tech has seen some
Marvel protection. Where are your rights to operate within brands that we know that people follow?
Yeah. Well, in a very, very crowded and competitive environment, we like to go with properties that have some brand equity in them, that have some marquee value,
Lee, that will
likely get some sampling when they are made. So, for example, we have a show we're doing now.
Where are your rights to operate within brands that we know that
all these anthropomorphic vehicles in a very, very crowded and competitive environment, led by we like to go with properties that have some brand equity in them, car called the have some marquee value, that will likely get some sampling when they are made. There are adventures that take place where kids, which is based on learn things as well from these stories. All these anthropomorphic vehicles that have personalities and get into adventures led by conflict and crisis and jeopardy. Shaq does the voice of his story. Another car called the Broncmobile.
Do you feel that there is I mean, obviously, this is the idea of the business, but kind of talking more from the investor standpoint and thinking about the trajectory for growth.
Breaking lower here.
With other big child-focused entertainment venues, not just YouTube, but of course Disney as well. There is people kind of now associate Netflix as being a little bit of a laggard in that department. From the investor standpoint, and thinking about the trajectory for growth. How do you compete with other big
under 11 years old
child-focused entertainment venues, not just YouTube, but of course Disney as well? I think people kind of now associate Netflix as being a little bit of a laggard in that department. Where do you fit in?
Jeff Bezos' company, Blue Origin. We're very, very laser-focused on kids in animation, specifically Michael Strahan animation. Under 11 years old. Group of kids that are on a vehicle in space. where they learn, as I said, they have to do properties that have marquee value.
Magic School Bus.
A little bit. And by the way, one of my partners was the producer of Magic School Blue Origin.
Okay, very cool.
Blue Origin, people we have in our team are very pedigreed. They come from the Walt Disney Company, they come from Warner Brothers, they come from a whole group of kids that are in a very senior level position, learn as they have adventures traveling through space.
Sounds like Magic School Bus.
A little bit. And by the way, one of my partners was the producer of Magic School Bus.
Okay, so
the people we have in our team are very pedigreed. They come from the Walt Disney Company, they come from Warner Brothers,
in order to grow, or can you maintain a profitable bottom line while doing that? Because of course, a company like Netflix has been around for a long time. The pressure's really been on them from the shareholder base to make money, but is because they've been spending billions and billions for years to establish their leadership.
So our
should we expect it to be a business that spins in order to grow, or can you maintain a profitable bottom line while doing that? Because of course, a company like Netflix has been around for a long time. The pressure's really been on them from the shareholder base to make money, but that's because they've been spending billions and billions for years to establish their leadership.
So our channel system, everybody has spent tremendous amounts of money plowing it into. We are not looking to get more subscribers at the expense of profits. Very expensive. I think I can say we're the only laser focused on the only streaming service I know of, and we believe in that content. Is currently we are also breaking even, a very measured, we'll make money this year. Approach to everybody has spent tremendous amounts of money losing money it into.
And that revenue coming right now purely from when someone signs up for the network on their device.
Well, it comes from advertising, laser focused on subscriptions, and then we are very fortunate that we have a dual income stream. We are also in general because we also have the consumer product licensing. How we are growing produce the shows, so we're not losing shows on your channel.
And that revenue coming right now purely from when someone signs up for the network on their device?
Well, if it comes from advertising, then we'll have toys from subscriptions, we'll have publishing. We are very fortunate that we have a dual income stream in general because we also have the consumer product licensing. When you produce the shows and you put the shows on your channel, well, if Shaq's Garage is a successful show, I did a show started just 2 weeks ago, very well. We started with, if it's one single video, then put it out on Fox Home Entertainment. We'll have vehicles. 5 years later, we had 300 licensees, 600 licensed products. We did $5 billion in retail sales. So when these shows take off, it's very binary. They explode.
Do we turn negative here? Or almost there?
A Ninja Turtles or a Paw Patrol video. Put it out on Fox Home Entertainment. Go down the list. 5 years later, whatever it is, 300 licensees, 600 licensed products, very big, $5 billion of retail sales. Kids are very aspirational. When these shows take off, it's very binary. They explode. Every year there's a Power Rangers or commercials, but I would say Ninja Turtles or a Paw Patrol or Peppa Pig. Figure out how they can play with them through various products, whatever it is. And
literally,
when they hit these shows, they hit very big because
more specific address to the question I was going to ask, which was, having thought about the licensing, clearly have quite a bit. That's a big part of the business. Thanks for explaining it to us, Andy. Let's definitely be in touch. Congrats on that.
Thank you so much. Figure out how they can play with them through various products.
What's the most popular show right now? Literally, 3 networks. Had a much more specific address to the question I was going to ask. Thanks, Andy. Having thought about the licensing, clearly quite a bit. That's a big part of the business. Thanks for explaining it to us, Andy. Let's definitely be in touch. Congrats on that.
Thank you so much.
Using information operations, if you will.
What's the most popular show right now on the 3 networks?
Reaching out to Russian soldiers saying,
right now it's
you don't have to die here in Ukraine. Your enemy is in Moscow.
Thanks, Andy. Hayward, Chairman and CEO
or surrender.
Cartoon
You don't
Studios,
have to
Ticker
die.
Tune.
We have seen, General, over the last 48 hours, a lot of commentary from the West about what this means. Can you give me a perspective on how accurate you think all that information is based on how hard it is to actually know what is going on in Russia and potentially on the ground in Ukraine?
Yeah. Well, of course, we're all anxious to find out more and understand what's really going on.
And we're red.
I'm
Yikes.
Putin does not really know exactly what's going on inside his own country. This looks to me like a massive failure of Russian intelligence, because the government seemed to have been caught by surprise by the Wagner Group's mutiny. The fact that they could so easily take over the headquarters there in Rostov, the Southern Military District headquarters, that is astounding. And the fact that the Ministry of Defense could not muster troops to deal with this column of 400 or so vehicles that was moving north from Rostov through Voronezh towards Moscow. Now, I am certain that there was all kind of messaging going back and forth. There were huge payoffs, threats, every sort of leverage you can imagine. I do believe that Prigozhin's family probably was threatened, and he would have been aware of that. So it's just hard to know what actually agreed, what ground truth is on a lot of these things.
Alex, I do find it fascinating that we are seeing defense stocks coming under such significant pressure on both sides of the Atlantic. Abby was bringing us GD, but over here in Europe, a whole range of European defense stocks are down. Is that based on an expectation? That must be based on an expectation that there is some sort of a peace dividend here. Yet maybe the lesson that should be learned from this is Europe needs to spend more. We need to spend more on defense. So do the defense budgets get cut if we see peace in Ukraine? Or ultimately, is this just down to munitions and things like that not being expended? Well, I don't know. I think it's fascinating that that's where the reaction is.
Well, General, that really goes to the whole idea of, like, is there an off-ramp? Will this actually increase activity? The West came out and very, very staunchly stood behind Ukraine, but in reality, Ukraine does need more weapons, and they need it quickly. So I wonder how you see that evolving.
Well, of course, the NATO summit in Vilnius is going to take place in about 2.5 to 3 weeks.
SPX down almost 20 points in the last 45 minutes here.
Is a renewed commitment by all the nations to dramatically
see what the next hour going to do.
And that this famous 2% standard becomes the floor, not the target. And so I also was surprised to see the information that y'all just showed about defense stocks. I think it's going to be the opposite. Even though Russia is having a lot of problems, there still is a lot of hard fighting to go. It's up to the United States to be candid.
Apple still looking strong here. Tesla back down more than 1%. Super Microcomputer still up 5%. QQQ turned negative, Nvidia turned negative, Netflix turned negative, Meta down more than 1%, Google down more than 1.5%, AMD just turned negative. It was up, I think, more than 2%. It's
General, we really appreciate your time. Perfect person to talk on a day like today when the market's really trying to sort out what it means. Ben Hodges, a senior advisor for human rights. All right, coming up, don't get used to the cooling inflation, and you can just kind of see the move in energy stocks, aka commodities prices. The Bank of International Settlements are saying that the next phase of inflation fighting will be even more difficult. We're going to have an exclusive interview with the head of the bank,
Partners Managing Director, Rohit, raising the price target of Amazon to 155 from 130, and Brent Thill, the Jefferies tech research analyst. Good morning to both of you, gentlemen. Rohit, why double down on Amazon now after it's had such a good run?
Hey, thank you for having me. I think Amazon is the under-the-radar,
Roth Capital Partners Managing Director, Rohit, raising the price target of Amazon to 155 from 130, and Brent Thill, the Jefferies tech research analyst. Good morning to both of you, gentlemen. Rohit, why double down on Amazon now after it's had such a good run?
As AI and as more thank you for having me. I think Amazon is the under-the-radar, commercialization, underappreciated, the best bet is Amazon stack AI play. That's what Amazon call it. Given estimates have bottomed out, advertising, commerce, and cloud play, and each of those have AI. I think they have applications that can further any news would be perceived as good news, and their lead versus any of the other companies. And as Amazon like it a lot, AI kind of commercialization happens. I think the best bet is Amazon heading into 2024. We like Amazon given their three-pronged advertising, commerce, and cloud play, and each of those have AI
this year. You think the AI story is still being underappreciated by investors?
Their lead versus any of the other companies. Even more so, Amazon like it a lot. As far as AI story, I think the cost cutting that they have been doing in case the next year's earnings estimates to an upward bias. I think the street is under-modeling the amount of cost cutting they've done so far in the last 9 to 12 months.
You think the AI story is still being underappreciated by investors?
This company can have. Just leaving aside even more so, and AI is like a cherry on top. As far as AI story, I think the cost cutting that they have been doing benefit from AI keeps the next year's earnings estimates they have the chips to an upward bias. I think the street is under-modeling the amount of cost cutting they've done so far in the last 9 to 12 months. And how much extra leverage that this company can have just leaving aside AI. And
Brent,
AI is like
any names stand out in your coverage area that you think is sort of underappreciated like that as we head into the second half and already such strong performance from tech?
I mean, all tech is up massively, so everything has been appreciated. There's a lot of AI fluff in a lot of these names right now, so let's just be very clear about that. Like, this isn't undiscovered.
Brent, any names stand out in your coverage area that you think is sort of underappreciated like that as we head into the second half and already such strong performance from tech?
Goes higher, but I think short-term install tech is up massively. Last week, everything has been appreciated. There's
dumping
a lot of AI hype right now, so the revenue reality very clear about that. Like, this is late this year into 24, given the magnitude of these runs. That could be the 60%. You know, Meta's up 137%. The long term, yeah, we believe. So I don't disagree with the long term. Believe in Amazon goes higher, but I think Microsoft is to the best AI plays that we have install as well. And I think there's a lot of AI hype where the revenue reality isn't going to hit until late this year into 24. And so that can be the disappointing factor in the short term. The long term, yeah, we believe we still believe in Amazon. Microsoft is to the best AI plays that we have. Remember, you have to buy the picks and shovels from NVIDIA to get to the goal. And then to create these platforms, to create the AI services, this is still rolling out. So all the software companies we cover are still figuring out how do you monetize it.
And I guess, are you
saying that you don't even Microsoft, right? The majority of their products aren't even priced yet. So they can't remember, you have to buy the picks and shovels from NVIDIA to get generally available. You can't actually monetize it. Create these platforms, to create the market services out this in the future, not what's going to happen in the short companies we cover. And I understand this is more, in our opinion, more of a 24 even Microsoft, right? The majority of the products aren't even but that expectation, so they can't monetize it yet. Will lift. So until it's on a price list and it's generally available, you can't actually monetize it. Given the magnitude of the run, a lot of that's already baked in terms of out in the future, not what's going to happen in the short term forward. Given the move we have. This is more, in our opinion, more of a 24 revenue event than it is a 23 event.
Weaker week, but
that expectation
rally for the month and the year in tech. Brent and Rohit.
These names ahead of time, and
Carnival
we're on
Cruise
board
Lines,
with that.
one of the top gainers on the S&P
given the magnitude
this year.
of the run, a lot of that's already baked in
off the back of earnings. We're going to break down the numbers
good news,
and a commentary with the CEO, Josh Weinstein, in the next hour. But first, we got highlighting your Carnival's conference call, which is currently a weaker week, but overall, broad rally for the month and the year in tech. Brent and Rohit. Good to see you both. Carnival Cruise Lines, one of the top gainers on the S&P this year. Those shares are under pressure this morning off the back of earnings. We're going to break down the numbers and a commentary with the CEO, Josh Weinstein, in the next hour. But first, we've got highlights from Carnival's conference call, which is currently under
sticky. Now, services prices depend mostly on wages. And what we have seen is that wages have been also very sticky. And as a matter of fact, they have been increasing. This is due to the fact that labor markets are still very strong, and given that workers have been losing real wages, they have been trying to catch up, and that catch-up effort is the one who is keeping services prices up.
So are you seeing those signs of entrenchment in that inflation psychology, and where in the world is it more pronounced?
Well, definitely in some areas we have seen it far more difficult for the disinflation environment to kick in. So basically this means that some further monetary tightening is conceivable. There needs to be more restraint on aggregate demand for that to be reflected in softer labor markets that would allow for softer pressures on inflation through the services sector.
Augustine, good morning. It's Guy. Why should we bother taking inflation back to 2%? Why is 2% the magic number? The last mile is to 2%. Why not stop at 3%?
Well, you know, because if you stop at 3%, then people might think, why not stop at 4%? And what we have learned, and I tell you, coming from an emerging market, high inflation is not good for society. Higher inflation will not bring up real wages. Higher inflation will not bring down interest rates. As a matter of fact, expected inflation will keep up, and that will be reflected in nominal rates, and eventually that will affect economic activity. Therefore, it's a no-win situation.
So based on that,
how does policy interact with monetary policy? Could you argue that fiscal policy could wind up making all of this worse as we wind up moving to an energy transition that's going to cost a lot of money?
No, here is a matter just of coordination. I mean, certainly monetary policy have to push forward in the short term to bring down inflation. Now, usually that is associated with some side effects of monetary policy. It can slow a little bit down the economy. It can also increase some pressures on financial markets. To ease those side effects, it would be very useful so that monetary policy doesn't need to be so tight for fiscal policy to show a little bit restraint. We see today that a lot of the fiscal impulse associated with COVID-19 and the hike in energy in 2022
Apple, very
is still
strong.
there, and is not needed. Therefore, it doesn't make any sense to keep fiscal impulse in place that monetary policy will have to take it away. So you have one policy fighting with another, and at the end that means more effort from monetary policy and more cost for the economy. So some form of coordination would be appropriate. And if we have, I would say, a stronger financial system, we have a more intrusive supervision, we have regulation to lock some gaps that that would make easier the application of the necessary monetary policy.
That would be the goal, but it's all about politics, isn't it? And when institutional safeguards are weaker, especially in those EMs that you mentioned, how much political pressure are you seeing on central banks right now?
Well, you mentioned the emerging markets. Emerging markets, to some extent, have been managing this quite well. Emerging markets have seen the costs of rampant inflation. There is some amount of coordination between fiscal and monetary policy. And I would say, relatively speaking, the adjustment process in emerging markets has been smoother. Now, definitely, the more central banks need to do, the more political pressure is on them. But at the end of the day, the autonomy of the central bank is there precisely to insulate the central banks from these political pressures.
Augustine, there's another way of looking at this. The reason why there is political pressure is because inflation is proving very hard to get under control. And I'm wondering why you think inflation is proving to be so hard to get under control and is taking so long. Why is policy transmission so slow at the moment? Why are we not seeing all of these rate rises feeding into the economy and having a bigger and quicker effect?
Well, I mean, one thing that we all know is that monetary policy affects the economy with a lag. So a lot of the tightening of monetary policy, we might have not yet seen the impact on prices. Now, that doesn't give us guarantees that what has been done so far will make the trip. That's why it's very important for central banks to keep very vigilant and to react quickly if they feel that more is needed. It's a matter of not long time. I mean, I would say that hopefully during the next year or so, we definitely will see much clearer evidence that inflation is coming down.
Augustine, can we game this out then? What happens if rates stay higher for longer? What does that actually then look like into then the real economy, into asset classes? Where are you most worried?
Well, you know, definitely we probably will see higher rates than what we tended to use, for example, in the last decade. Now, they don't need to be extraordinarily much higher rates of interest. I would say what is important for this is precisely that the inflation premium in interest rates doesn't get entrenched. And for that, we need a quick impact of monetary policy action in inflation. I think precisely for not settle into an economy with much higher rates of interest, that is a key reason for abating inflation as fast as possible.
Historically, many high inflation episodes have been followed by banking crises, right? Given what we've seen already in terms of banking turmoil,
the leader of the Wagner or whatever group just said we didn't march to overthrow Russia's leadership. So
I mean, what I can say is that we feel with relative.
Don't know what that means, but yeah.
Healthy. We have gone through many exercises, stress testing banks and so on, even in light of the recent collapses of some institutions, where the problems were more than anything idiosyncratic. But you're right. I mean, when there is more financial stress, when there are tighter financial conditions, there are some accidents that could happen. The impacts of higher interest rates can affect the credit book, can certainly affect the valuation of some assets in the hands of banks, and that can have some implications. So yes, there is higher risk. There is higher risk for this type of financial instability when interest rates are higher.
It's been interesting that during the banking turmoil, China was seen as a safe haven in terms of banks. Their economic recovery has disappointed. What are the implications of that?
Well, the implications is that global growth will be lower, and certainly growth is a very good palliative for many of the problems we are seeing. If you see higher growth, you will see better sales in firms, and therefore you will see better paying conditions. Also, aggregate supply, if it increases more, many goods and services will have adequate supply, and that would imply less inflation. So therefore, I think it's very important for China to fully recover as soon as possible.
Augustin, it's been great to catch up. It's always such a pleasure to speak with you. Thank you very much indeed for your time today. Augustin Carstens, Bank for International Settlements General Manager, and of course the former Governor of Mexico's Central Bank. And I'd like to add my thanks as well to Bloomberg Daybreak Asia co-anchor Sherry Ann. Sherry, great to see you. Thank you very much indeed. This is Bloomberg.
Caroline, space though right now. And okay, I don't know what else the market wants. Let's bring in Nick Theodorakis, Joe Mazzola for a quick thought here as the market remains divided. You know, Russell leadership, kind of interesting, Joe. We've been talking about this idea of maybe a little rotation. I don't want to make too much of it. There's only 50 bips of it right now, but at least there's something else the market wants. New in the leadership. Let's bring in Nick Theodorakis, Joe Mazzola for a quick thought here as the market remains divided. You know, Russell leadership, kind of interesting, Joe. We've been talking about this idea of maybe a little rotation. I don't want to make too much of it. There's only 50 bips of it right now, but at least there's something new in the leadership today.
A chance to move up. I think we saw that at the beginning of June. This idea talked about that for a little bit. We're going to catch up. That just kind of faded in the market to offset gains. I think it's important for the rally to continue to kind of see some of the communication services, small caps, and the Russell, and then some of the other underperforming sectors. Those sectors. We'd love to see give the rest of the market a chance to move up. We're getting some of that today. We saw that at the beginning of June. We talked about that for a little bit. Silver, gold, pushing off a bit. Energy is helping. I think it's important for the rally to continue to kind of see some of the strength over the weekend. But some things to kind of keep an eye on for sectors. We'd love to see, some help from financials, materials. We're getting some of that today. You look at some of the commodity space.
Nick, this week we got inflation, of course. Is that our economic
energy is helping,
highlight?
I think, a little bit
GDP, but it's the third look,
some of the geopolitical risk over the weekend. But some things to kind of keep an eye on going forward.
Yeah. The bond market kind of fading a little bit since the early morning
transitory inflation for a long time now, right? And what I mean by transitory in this context is it's moving around from sector to sector. So we get durable goods tomorrow. I think that'll be an interesting one. We'll look at auto sales, we get home prices. It's been sticky in areas, and it's been, we've been talking about kind of others. I was reading some stuff over the weekend about food prices for a long time now, right? And what I mean by transitory in this context is it's moving around from sector to sector. We get durable goods tomorrow. I think that'll be an interesting one. The highlight number, we'll look at auto sales, we get home prices Friday. Especially going into a long weekend. It's been sticky in areas, and there's a potential for real volatility there. And others reading some stuff over the weekend ahead of that food prices starting to come down Monday, and then the holiday. We start to see some of these areas. I think it's going to be pretty interesting to see how those numbers are digested. That that is a good thing. I think the other data obviously throughout the week, but PCE data on Friday, jobless claims certainly, especially going for the Fed, just given the fact that there's a potential for real volatility there as people. So a lot of data position not ahead of that short week trading day Monday and then the holiday Tuesday. So next week, and I think it's going to be pretty interesting to see swings on how those numbers are digested. I think this week what that does. And the other data obviously throughout the week, but jobless claims certainly and watch for the Fed, just given the fact that they're still concerned about the labor market. So a lot of data, not technically a short week this week, but I think it's set up for the holiday next week, and could see some swings on fairly light volume, I think, this week.
All right. Right now, little Russell leadership and Dow softness.
Student loan repayments starting to resume, and other pressures that are coming on the consumer.
Yeah.
That's it for MTO. Thanks for joining Trading 360 with Nicole Petalini.
Time period when you look back 10 years, and home equity as well has gone up. All important things to continue to monitor.
Which often doesn't happen leading into recession, right? People get really over-levered and indebted. Student loan repayments starting to resume, and other pressures that are coming on the consumer.
There's another action-packed hour, even straight ahead, up sharply over a time period when you look back 10 years. And home equity as well has gone up. All important things to continue to monitor.
Which often doesn't happen leading into recession, right? People get really over-levered and indebted, and so the fallout is deeper. It's why economists think this will be shallow.
There's another action-packed hour straight ahead.
The leader of the Wagner Group, it just says that they will cease existence on July 1st. Well, that's a first. I guess they really regret marching to into Russia, huh? Can't go against Putin, man. Anyways, let's look at what this market's doing. Everyone's on break, huh?
Live from the New York Stock Exchange, the Ameritrade Network.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk
Live from the New York Stock
and
Exchange,
capture opportunities.
the Ameritrade
In
Network.
every market climate, across every major asset class, to seize each possibility at precisely the right moment. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk, see the correlation between and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. With a heightened awareness, CME Group, of opportunity is everywhere.
Constant assessment. We empower those who act.
All right, guys, it is time to go to the gym.
See the correlation between things above.
Thanks for tuning in. As always, like the video, subscribe, as I plan to do this more often.
With a heightened awareness of what's
yeah,
possible.
can't wait to see you in here.
Constant assessment.
See you later.